Good morning, everyone. Thank you for joining today's webinar on the Affordable Care Act's 1094 and 1095 reporting requirements. I'm Tina Lewis, and I head up the Compliance Department at SterlingRisk. We are committed to keeping our clients abreast of healthcare reform and legislative issues. During this presentation, Jennifer Reed from ECI will break down the details of the reporting requirements and review the 1094 and 1095 forms and instructions. ECI is one of our preferred HRIS payroll providers, and Jennifer was key to the development of ECI's ACA reporting services. Just a few housekeeping items to address before we get started. We kindly ask that everyone place their phones on mute during the presentation. You'll have the ability to ask questions using the chat function. Simply just type in your question and click send. At the end of the presentation, we will do a Q&A session and address as many questions as we have time for. Also, please note that this webinar is being recorded and it will be available on our website, www.sterlingrisk.com. Thanks again, and now I'll turn it over to Jennifer Reed so we can get started. Jennifer?
Good morning, everyone, and I appreciate you taking the time to join us. And I also want to thank SterlingRisk for allowing me to present to their clients. I just want to start off, what we're going to cover today. I'm going to go through a little bit of introductions, of course. We're going to dig into the meat of the 655 and 656 reporting, really focusing in on the 1094 and 1095C. Put a little different, probably a different spin on it than you've ever seen. My background's a little unique to cover this from a different angle. And I've actually been doing this presentation all over the country for brokers and employers. And so hopefully you'll get quite a bit of knowledge out of the actual logistics of reporting today. I'm not an attorney. I'm not here to cover the law as much as to give you ideas on how you're actually going to be able to do the reporting and options for you to consider if you're looking for a vendor or even at your own current vendor for this type of solution. To start with a little background on myself, I started my career in core employee benefits at Cigna Healthcare, really on the service ops side right out of college. I did everything from contract negotiations with large facilities. I did worked on supervisory issues and worked with large accounts like Sprint and Verizon. I joined sales in the last year of Cigna. From there, I went and worked for a benefits enrollment company, which some of you may have heard of a company called PlanSource that acquired the Ben Admin company. And then for 5 years is when I really stepped into the HR technology space because I was consulting for employers nationally, working with broker partners. And so I consulted with about 600 employers nationally, the largest being actually 30,000. 16,000 is a company you may recognize called Cabela's, but mainly with employers that are between about 50 and a couple of thousand employees. I had intimate working relationship with many vendors because I had so much volume coming through me, even companies like ADP, Ultimate, Ceridian, and others you probably will recognize on the HR payroll side as well as the benefits enrollment space. I also worked with ECI when I was an HR technology consultant. I joined ECI in October 2013. If you hear my accent a little bit, I work remotely for ECI from Texas. My role is unique. I'm not a traditional payroll sales rep. We have those all over the country, and one that covers your specific territory. My role with ECI is I grow relationships with brokers, HR consultants, and HR tech consultants nationally. And as a result, the ACA piece, of course, is very near and dear to me, and I've been very involved in our development in that area. And as I go through this, by the way, feel free to ask any questions in the chat box, and I'll cover them at the end. Also, after the presentation, feel free to outreach to your representative at SterlingRisk. They have a great resource, a benefits attorney that's known nationally. We also have that same resource. And any questions that they can't handle, I'll be glad to help, even if you're not a prospective customer of ECI. I'm all about the relationship with SterlingRisk, and I'm absolutely willing to assist them, as well as they've got a great resource as well. So to give you a little background on ECI before we dive into the logistics, ECI, we're a full human capital management system and HR payroll provider. We have about 600 clients nationally. We're really that mid-market focus, with employers that have 100 or more employees. Our average size client has about 400, 450 employees. Our top competitor is companies like ADP, Ultimate. So if you're familiar with those type of vendors, that's the space we're in. We really have an end-to-end solution, hire to retire. It is a single database solution, meaning that there's not multiple systems integrated in any areas. So we have everything from recruitment to paperless onboarding, core HR, payroll, benefits enrollment, learning management, performance management, as well as a time and attendance product that has the full functionality of, clocks and mobile and all of that. The reason why I picked ECI, ECI is a name that's not as known out there, like some of the others. But when I was doing HR technology consulting, I actually have 5 opportunities come up when I was considering leaving that role. And I picked ECI strategically because they did such a great job on implementation and service when I was a consultant. And if you think about the relationships that I grow, like with SterlingRisk, the relationships that I've had, some last 10, 15 years. And a relationship like that, you can't do implementations well only 50% of the time. So that's the core reason why I chose ECI. I'm very proud of the company. We have a high retention rate at 98%. I always joke, but it's so true. Every vendor says that they have a high retention between 96 and 99, and so to me that number is not as valuable to you as the fact we have 92% of our customers agree to be references. So that's pretty powerful. The next 3 employers that I have listed up here, I just want to give you a little brief. I'm particularly proud of these case studies because they were employers that I consulted with way prior to joining ECI in October 2013, and they're still happy ECI customers. We have lots of references out there. If you're interested in our product, just feel free to contact SterlingRisk, and we'll get you introduced to the correct person internally. Now to get to the meat of the reporting. So the 655 and 656 reporting, I'm glad you've already had a webinar with SterlingRisk through Stacy Barrow because the law itself is very complicated and you really have to have quite a bit of exposure. I'm going to start a little bit with the basics just to make sure we're all on the same page because there's a lot of acronyms used in the forms and a lot of terms used in the forms that if you don't have a quick reminder of some of those, when I'm going through the forms, you may lose part of that information. So I'm going to start with a little bit of the basics, and then we're going to get into the actual reporting. To start off, why you need to do this, the government is reliant on your reporting to track compliance. You'll hear this reporting, it has a lot of different terms, which is confusing as well. Everything from ACA reporting to end-of-year reporting. You'll hear it called 655 and 656, or 4090 80H, or 1094, 1095. I'm going to go through the reporting and simplify it for you from your employer perspective and where you need to really focus on. But the whole point, the individuals, there's a lot of individuals out there that are currently enrolled in the public exchange and receiving tax subsidies. As you know, individuals are required by law to have minimal essential coverage or pay a tax penalty, and employers are required by law to offer affordable minimal essential coverage and minimal value. Your reporting is the key to tracking compliance on any of that. Without the employer level reporting, the individuals that are receiving tax subsidies, there's no way for them to have that check and balance to see if they are correctly receiving those. One thing that I've had a lot, and I really hammer in on this point, there's a lot of employers out there that are waiting for one reason or another. They think the law may change, or I think it's more of a logistics reason. They're thinking that, okay, I can look at it next year and come back and figure out the reporting for this year, just like maybe I do on payroll taxes. This is not what's very important about this law. This is very hard from your perspective. First of all, I want to point out it is currently effective, for this year, this calendar year, and the first time you're required to do reporting is in January and February 2016 for 2015. It does apply to all ALEs, which is applicable large employers, meaning that employers with 50 or more full-time employees, including full-time equivalents, whether you offer an insurance or not. It's a very important point. Another important point is employers between 50 to 99, even if you qualify for transition relief, you still have to do the reporting this year, next year, for this calendar year. Now, I get that question a lot, and so I want to make sure that that's very clear. When I go through the actual forms, you'll see a code that's used for transition relief, but I want to make sure that you realize that you are required to do the reporting for this calendar year. If you are a part of a controlled group, meaning generally if you have multiple EINs that determine if you're an ALE, if you still have a question in that area, you definitely want to talk to your ERISA counsel, engage SterlingRisk, have those conversations, because at this point, anyone that's an applicable large employer this applies to, you really need to know if you should already know at this point if you're considered an applicable large employer. So that's something you really want to get on now if you still have questions in that area. This reporting also applies to self-insured employers with less than 50 employees. Now, the fully insured space is less than 50 have no employer-level reporting requirements. That's really the only employers that are not affected by this piece of the law. Many of you may be on the phone that have already done some affordability analysis or done some average hours per week, average hours per month on measurement periods, figured out your measurement period. Those two pieces apply, to certain industries, certain organizations, mainly retail, hospitality, restaurants, any organizations with a lot of turnover. What I want to make sure this is clear is regardless if you offer insurance or not, regardless what type of organization you are, if you have 50 or more employees, this reporting is something you will have to do for this year. The hard part about this reporting, why you can't wait, is that there is month-to-month tracking of data. Now, the employer-level information, like the total number of full-time employees or total number of employees, is something you can probably get at even if you wait. The tough part is the employee-level information, and I'm going to cover that when I get into the 1095-C, such as the offer of coverage on a month-to-month basis at the employee level. And for those of you who are self-insured, enrollment information on dependents, spouses, even on your employee. A quick reminder of some acronyms that will be used throughout the forms. Hopefully everybody's familiar with the acronyms ACA and PPACA. The three that I'll use a lot that I want to make sure that you understand what they mean. ALE, applicable large employer. MEC is minimal essential coverage. And MV is minimal value. So the basics on MEC, generally this means if you offer employer level insurance that you offer MEC, so that's actually an easy one. On the minimal value, it means that 60% of the actuarial value, meaning that your plan on average offers at least 60% of the actuarial value. If you don't know at this point if you offer minimal value, that's another area that you really need to know prior to getting to the reporting. So if you've been waiting to figure out this, you definitely want to outreach to SterlingRisk at this point and figure out if you know if you offer minimal value insurance. Now to the reporting. So I'm going to start off with a cheat sheet because I want to focus in on specifically the employer reporting. And for those of you that are going to be doing this service in-house yourself, I'm really going to focus in on the forms that you need to study. So to start off, the 1094. So, and this is regardless if it's a B or C. So the 1094 itself, think of it as an aggregate level form. This is the form, it's like a W-3, but with ACA-related information. This is the information on your employer really at an EIN level. So this is the form that's going to have like total employee count on a month-to-month, total full-time employee count on a month-to-month based off the EIN. Now, when you get to the 1095, and you're going to hear me say this a lot, but it's very important, this form is specific to the individual, meaning that every box that's on a month-to-month basis has to be about that individual employee. And it may seem simple now that I'm pointing that out, but when we get to the form itself, I'll point out some areas and some questions that came up, and it will make sense to you. It is mailed to the employee as well as sent to the IRS, really just like a W-2. It's different than a W-2, however, because some of you, on the 1095, you're going to submit a 1095 for every employee that was full-time 1 month out of the calendar year, where you send W-2s out on the part-time. So your number of 1095s may differ, of course, from your W-2s. Now the B forms are really for the self-insured less than 50 market. So that's the 1094B and the 1095Bs. One other area that the B forms are utilized, if you are self-insured and 50 or more employees, you have the option to use the B forms for what's called non-employees that are enrolled on your plan. So, for example, if you have an individual that's been on COBRA 18 months out, they weren't a full-time employee 1 month a calendar year, so you can choose to use the B forms for that individual rather than using the C forms. However, once that became optional on the final instructions from the IRS, I just want to point out, from your perspective, if you're at the basic understanding of this reporting, it's a lot easier for you really just to study the C's and know the C's rather than worry about 2 different types of forms for your employees. Because if you're self-insured and over 50 or fully insured and over 50, you can use the C forms for all your employees, regardless if they're a non-employee or not. And once the instructions were finalized as well from the IRS, companies like us at ECI, that's an HR payroll company that provides reporting for our clients, we focused in on all our development on the C forms, as did most of our competitors, because it's a lot easier from a developmental standpoint to map 1 set than it is to work on 2 sets for different types of scenarios. So for the purpose of this presentation, because the majority of you really are going to need to report on the C forms, that's going to be my entire focus. Another point, too, though, if there's some of you that need to report on the B or would like to use that option, if you know the C, you know the B. And so that's another reason why I focus entirely on the C. So to start, I'm going to start with the 1094C, and if you remember, this is the aggregate employer level form. So this form is you would submit on a per EIN basis. A lot of people like to refer it like a cover sheet. I like to compare it to a W-3 so you have a quick connection as far as what it is. This part of the reporting process is actually the easier part for you. Now, as I go through the 1094 and the 1095, just remember what I'm going to point out is a couple of things for you to remember, where your data sits, and I'm also going to point out areas as far as if you're using a payroll HRIS or benefits enrollment provider, you'll start going through the process and realize where your data sits and what you have to have access to. So to start off in the 1094C, the top part is just basic employer information, so I'm going to gray that out. If you see Part 2, line 19, is this an authoritative transmittal for an ALE member? I'm pointing that out specifically for a couple of different reasons. First of all, really that data, and if you're filing the reporting, should fall on your payroll, in your payroll system or your payroll provider. But what I want to point out as far as 19 is there's been a lot of confusion as far as what that means. When the draft instructions were released by the IRS, it was pretty vague as far as what that authoritative transmittal box was for. And I want to give you a little look behind the scenes, so when you're evaluating your own solutions, it'll give you a little window. So when ECI was first developing our ACA reporting way back when, we have internal attorneys as well as internal staff that's very knowledgeable about this area. And even that line, so for the draft instructions of the IRS at first, when it was talking about the authoritative transmittal, and it's tied into the same section where it's talking about the aggregated group, our understanding is that if you have multiple EINs, that you would aggregate those EINs and then put the totals, it's like this is going to be an accumulative authoritative transmittal. And I point that out mainly because that was incorrect. We have a national benefits attorney on retainer, Stacy Varro. You may know him as known nationally, as well as Peter Marathis. And prior to the final instructions, we actually had a back and forth with them about this specifically. And I point that out because there are many providers out there that are smaller than our organization that may not have a resource like that to really dig in and figure out the specifics. And so you want to make sure any provider that you work with has a resource like that. What line 19 really means is that if you have multiple EINs, you need to submit one authoritative 1094C per EIN. And then you're going to have all the 1095Cs that go under each of those EINs. It's a very important distinction. Why it gets confused is that some of you that are on the line of whether you're an ALE or not, you know, if you're determining if you're an ALE, you're adding up all your employees under the multiple organizations to determine, you know, if you're part of an ALE. Really, at that stage, everything else after determining you're an ALE is done on a per EIN basis. So if you see the language ALE member, really from you that just translates to that's the EIN. It doesn't matter if the EIN has 20 employees or 100, it's going to be on that per EIN basis. And so 99.9% of the time, this box is always going to be checked yes. The only situation that you would check it as a no, an example I was given, so if you think of one EIN, and maybe you have one location that's using one payroll provider, and the other location is using a different payroll provider, or maybe you're doing it in-house, but both of those entities submit individually, and now remember they're under one EIN. So they're not authoritative because there's two submittals from two different maybe locations, and then you have to create as an employer an authoritative transmittal that combines those. Since normally that would happen in situations like that is very rare, most of the time if you have situations where it's broken out like that, each breakout is usually a separate EIN. And so it's very rare that that box would ever be checked no. On the second page of the 1094-C, I'm going to go through some of these columns and point out some really important points for you to consider. To start out, so if you see column A, minimal essential coverage offer indicator, that's actually the easiest one on here because either you offer it or you don't. So most likely it's going to be a yes or no for all 12 months. Now when you get to column B and you see full-time employee count for an ALE member, now remember every time it says ALE member, this is on a per EIN basis. So I want to point out something here. So the definition of a full-time employee, of course, changed with ACA. So the definition of a full-time employee is, 30 hours average per week or 130 hours per month. For those of you that are using a measurement period, if they reach that in that measurement period, then they flip over to full-time. That's really the full-time employee count is what you're going to put in this column on a month-to-month basis. Now, I've got the screen prints cut off, but it does go all the way to December, so you're going to have to keep this date on a month-to-month basis. What I want to point out to you, though, is for some of you who have measurement periods or average hours per week, average hours per month, most of that data is going to be in payroll. However, TLM is an acronym for time labor management, time and attendance. I want to point out something for you to realize when you're looking at providers that offer, dashboards or easy reporting or something that points out just an answer as far as who's full-time or who's eligible. A little look behind the scenes. So most payroll cycles in general are semi-monthly, bi-weekly. And if you think about that, that's 2 weeks of data. That 2 weeks of data could cross, a month end. It could cross, obviously, a payroll week never starts, on Sunday. And so when you have 2 weeks of data, some interfaces from time and attendance into payroll really just gives that data in that block, if you will, in that 2 weeks. And so we'll receive the info in, how many hours are worked in 2 weeks, just so we can process payroll on the payroll side. Why I point that out is that dashboards and reports and things that are just using payroll data, sometimes there's a little tweak behind the scenes to get it to an average hours per week, average hours per month. And you just, when you're looking at tools like that, you just want to dig in or at least involve SterlingRisk in that discussion with your providers. So you really ask the rules behind the scenes when it comes to those type of reporting. SterlingRisk may not know from a technology perspective, but they know from an ACA perspective. So they could be involved in those discussions with you. And I point that out because the employer level understanding of the reporting right now is quite a bit lower. And what happens is, from a technology perspective, you may ask your provider, do you offer measurement reporting? The provider says yes, and then that's the end of the conversation. And my point here is you really kind of want to dig in from a law perspective and ask some hard questions. Another example is exception reports. So an employee that's out on FMLA for unpaid time, those hours still have to go into that average hours per week, average hours per month. And so if you're looking at a standard dashboard that's spitting out who's benefit eligible or who's full-time, you want to make sure to know whether or not it includes those exceptions or not. Most organizations may not include the exceptions, like we don't. It's not a big deal for our clients because they just go into our TLM for those individual employees that doesn't have the exceptions. But you just want to ask those so you know what goes behind the scenes on the report so you're prepared if you have to do something else in that area. Total employee count for ALE member. This includes employees that are receiving a paycheck and those that are not, that are considered a full-time, that are considered a total employee, not full-time. You're going to put part-time numbers, everything's included in this. So even if you have an employee out, and this is my main point, on FMLA, my same example, and they're unpaid, that employee may not show as a number in your payroll for that month. And so that's an area this field really may pull from payroll and HR. And HR may be an HRIS system for you, it may be Excel, it may be paper files, but you want to make sure you're coming into the true total employee count on a per EIN basis to put in this month on a month-by-month basis. Now the last page of the 1094-C, for those of you that are part of an aggregate group, meaning multiple EINs, remember the authoritative transmittal. You have an authoritative transmittal per EIN, and this is where you're going to list those other organizations and EINs that tie into that one EIN. Now, each EIN still has to do the reporting, and all the others that are tied into the aggregate group will be listed on this page for each of those. Now I'm going to flip to the hard part for you, the 1095-C. And the reason why I say it's the hard part is a couple of different reasons. Now, remember what I said about the 1094. That's the aggregate employer level form. When you flip over the 1095-C, this is about your individual employee, and it is specific to them. And if you notice Part 2, and even down here at the bottom, it's on a month-to-month-to-month basis. So that's part of the hard part. I'm going to go through the codes a little bit and talk to you a little bit about from the technology perspective too. So to start out, you as an employer of 50 or more employees, you have to complete one of these for every employee that was full-time 1 month out of the calendar year. So even if they're not a current employee, but they were full-time 1 month, you have to produce a 1095-C. If they were a part-time and never became full-time, you do not have to create one of these unless you're a self-insured employer and they happen to be enrolled on your plan, which is not very common. But for those of you that have that, if they're part-time, you don't have to do Section 2. You only have to do Part 1 and Part 3. And for those of you that are curious about the B forms, really the data that the B forms hold is what's in Part 1 and Part 3. And that's why I said if you know the C, you know the B. For those of you that are fully insured, you're required to complete Section Part 1 and Part 2. If you're self-insured and 50 or more employees, you're going to do Part 1, Part 2, and Part 3. So to start, the top part is just basic employee information. And one thing I want to point out too, this bottom section here for your self-insured, that's the area that most employers worry about, because down there is where you're going to put dependents. You also have to put enrollment information on a month-to-month basis. You can see January through December, and you have to check whether they're enrolled. I want to point out that's actually not the hardest part on the 1095-C. And the reason why is that if you're not tracking that information today in Part 3, at least you can get it from somewhere. And this is a good point. So the insurance carriers at least have this information on file, who's enrolled on your plan, the spouse and the dependents. The real hard part of this form is actually Part 2. And one thing I want to point out too, we had a big switch. If you remember, the 1094-C was primarily payroll and HR data. When you flip over to the 1095-C, the real hard part is the majority of this form is benefits enrollment. Really the only part that even ties into payroll is line 16 on Part 2, and because that ties into your safe harbor. If you're figuring affordability based off of Box 1 W-2 or rate of pay. So the tough part, I'm going to start on 14 and go through 14, 15, and 16. So you see 14, that's the offer of coverage. In that field, you have to indicate one of these codes on a month-to-month basis. So this is where you're going to prove your offer. And a big point here. So I, Jennifer Reed, I'm enrolled in Employee and Family Benefits for ECI. So my amount that comes out of my paycheck is what I call a payroll deduction. It's the total amount. That amount and whether I'm enrolled really has nothing to do with 14 and 15. And I want to make that very clear. 14 is about the offer. So even if I, Jennifer Reed, am offered benefits from ECI and I don't enroll in benefits, I'm still going to have to show in 14 that I made an offer to that employee. So how you get to that information is why I say it's so tough. You know, I did HR tech consulting for many years, and whenever I was talking to the HR director of the company or HR generalist, and I would go through where their data sits, you know, where your payroll information sits, what system are you using, and I would get to the benefits enrollment area, and I would ask, you know, are you doing benefits enrollment? And 9 times out of 10, most employers are not doing benefits enrollment in an electronic way. And so the answer I would get would be, you know, we store it in paper files. You know, we store it in Excel. We're relying on the carrier. And why I point that out is how you really get to the offer is so from our perspective, if an employee in our system, you know, if one of our clients is using our benefits enrollment, if the employee's going through it and they enroll or they waive, then it defaults they had an offer for that month and the rest of the year. And why I stress the waive, that's really how you get to the offer. And that's an area that most employers are tracking in a manual way, if you're tracking it at all. So you've got it in the employee file, you know, you may not have it in your Excel document. And I point that out because if I back up a little bit so you can see the form, you know, you have to show if you offer benefits to this employee on a month-to-month basis. So if you're a 1/1 renewal and you offer benefits to this employee and they waive, you still have to have the code for the offer here. If they change status anywhere in the year, that month, your code may change. And so this is something that's very important for you to understand, that you likely need to be tracking now in Excel if you're not doing it in an electronic way. You know, we're already in June, and if you're having to go back and recover the data, the further along you get in the year, the harder it is going to be for you to look back and get the data for that particular month. And that's why this reporting is so challenging from your perspective. As far as, you know, you're not going to be able to wait to January and come back and figure out this data if you don't have it in at least Excel, if you don't have it in an electronic way. Another very important point, say you're looking at a solution now, like ECI or others, even if you went live with us or another provider in December or November, at this point, we're still missing all the data earlier in the year. So in order to upload historical information with any provider, you really have to be tracking this in a way that can either be uploaded, you know, really, you don't want to come from your paper files and be keying into Excel so you can get the data in. So this is an area that you really want to be tracking manually if you're not tracking it today. A couple of codes I want to point out. So if you see 1A, the qualifying offer, for those of you that have already figured out if you offer affordability, and employers that have 100% of the employee rate and offer minimal, essential, minimal value, you're the lucky ones that get to use 1A. If you can use 1A, line 15, you actually do not have to put an answer in there. All the others, you're still going to have to put an answer in 15. Most commonly used, of course, are going to be 1B through 1F. You know, and that's just you offer minimal essential coverage. You can see they're tied into the tiers, and if you offer employee only, not dependents, dependents and spouse. One thing I want to point out, if you see all of this area, it's definitely tied to benefits enrollment. And why I point that out, if you're one of those companies that's using a payroll-only provider, and when I say payroll-only, you know, there's a lot of employers that outsource payroll, but maybe they don't have benefits enrollment, or the provider doesn't even offer benefits enrollment. If you're one of those companies that's using a payroll-only provider, you definitely want to dig in and see if that provider is offering your reporting, how are they tracking it? And why I point that out, there's a lot of payroll service bureaus, you know, they're smaller local providers that are rebranding and reselling someone else's software. And if they are doing that and they don't have benefits enrollment, not only do they not have the fields to store this on a month-to-month basis for you, but they don't even have the ability to create their own fields since they don't own their technology. You know, when I was a consultant, I used to recommend those local providers all the time, especially in that less than 100 space, you know, because they're great from a service perspective. You know, it's someone you know. It's usually someone you can even see out for lunch, you know. But once this reporting came out, it really became tough for those smaller providers to survive in that 50 or more employee space. So you really want to dig in and figure out how they're providing that service for you if they're providing the reporting for you. If you see 1I, for those of you on the line that are between 50 to 99 and you qualify for transition relief, that's the code I was talking about that you would have to use on this form if you qualify for that. I'm going to take this off because I want to show you a little bit about line 15. Line 15 is actually the easiest part of Section 2, but I want to make a big point here. So it's the employee share of lowest cost monthly premium for self-only minimal value coverage. So if I go back to my example, I, Jennifer Reed, am enrolled in employee and family coverage. That's not the answer for line 15. And let's say ECI offered 4 plan options. So I had 4 different carriers or 4 different plan options I could have enrolled in. And maybe I enrolled in option C, but option A is my lowest minimal value coverage. So really that's the employee cost if they enrolled in your lowest minimal value coverage. It has nothing to do with what they actually enrolled in. And even if they didn't enroll, you have to have that employee share of lowest cost. That's another area that, companies that have HRIS and payroll, meaning that they have benefits enrollment, it's a very easy from a technology perspective because we can just point that answer to the employee-only rate, the lowest minimal value plan. For those payroll-only companies, they really only store deductions. And if you remember my example of Jennifer enrolled in employee and family, that's my payroll deduction. That's not the answer for that line. The only other thing I want to point out is that answer is specific to that employee. So if there's any time that, like, especially that 50 to 99 space, when that becomes the small group by law, if that becomes where it's individually rated, in other words, based on date of birth, it will get a little tougher because you may have a different answer based off the individual employee. Other than that, that field is actually pretty easy because most of you will have the same answer for all your employees because that's their rate, unless you may have a different division, a different state, and a different rate. Now, line 16. Line 16 is where you're going to put if the employee enrolled, see 2C. So 2C actually trumps all the other codes. If 2C applies, you're not going to put any other code in line 16. Some of the other ones I want to point out, you see 2D, employees in a limited non-assessment period. For those of you that have done all the hard work on the measurement periods, it all comes down to that simple code right there. So if you have an employee that's in a measurement period or in a waiting period, you're going to use the 2D for them. Now I want to point out something, though, because remember at the beginning when I said you're supposed to do a 1095-C for any employee that's full-time 1 month out of the calendar year? So really the only time you're going to use that code, let's say an employee's in a measurement period, you measured them and then determined that they were full-time based on average hours per week or average hours per month. So you'll use that code up until they flip at full-time, and then at that point you're going to switch to either they enrolled or one of the other codes that apply. For those of you that have unions, 2E is for you. You as an employer are still responsible to do Part 1 and Part 2 if you have employees that are enrolled on a multi-employer plan. However, they know you don't have optics into who's enrolled, and so you would use 2E for that space. One thing I want to point out, see 2F through 2H, if none of the other codes apply, you have to know which safe harbor you're using for affordability. So literally what you're showing is, let's say you have an employee who offered benefits and they didn't enroll. So you're proving that you offered, you're showing their employee-only rate, and then you're telling the government which safe harbor you use for affordability. This one I point out because there's a lot of employers out there that may have already done the affordability analysis, but they really don't know which one their broker used, whether it be the W-2 or the federal poverty line, the rate of pay. You need to find that out if you're doing the reporting yourself because you will have to use 2F, 2G, or 2H in that instance if none of these other apply. One thing I want to point out for the self-insured, this is where you put the employee, spouse, and dependents. This is also where you put that Social Security number that you've had to collect and date of birth if you weren't able to collect this the 2 times that you asked. And it is a reporting on a month-to-month basis, and this is the one area that really shows enrollment information. So this is who's covered on your plan. So some important points to point out. The employer is required to file Form 1094-C and 1095-C to the IRS and furnish a copy of the 1095-C to the employee. The dates you must file them to the IRS by February 28th, 29th for this tax year if filing on paper. If you're filing electronically, you get to March 31st. The Form 1095-C must be furnished to the individual employee by January 31st, just like your W-2s. And for companies that are using payroll providers, most likely they'll come just the way your W-2s do, because we're going to send ours out to our clients in the exact same way. An important point for those of you that are large employers on the phone. So filers of 250 or more, and the law specifically states information returns. So what that means, if you count up your 1095-Cs, now remember, it's not W-2s, it's your 1095-Cs. It could be a different number. And this is on a per EIN basis. So if you have 1,000 employees, if you don't have over 250 on one EIN, you can still, if you want to, file by paper. But those with 250 or more must file electronically. And I put the link in my presentation, and SterlingRisk will share this with you. The IRS has already released a draft publication of the actual instructions for filing electronically. It's about a 45-page document. If you're one of those organizations that's at that size and you're planning on doing this filing in-house, you definitely need to look at that. And you also need to get IT involved, because it's not, I've had this question a lot and I want to point it out. It's not a simple save the PDF, upload. It is 40 pages, 40-plus pages the document is, and there is quite a bit of code involved. I've got 2 little screen prints here just so you can get a glimpse at it. So if you're planning on filing it yourself, you definitely want to get IT involved in this part of it once you get the draft from the IRS. Now, let's cover what options you have. We know the reporting's complicated. There's a lot of employers out there looking for options, standalone ACA providers. How do I do this? How do I maneuver this? I want to start and give you a little glimpse. Before you ever start looking for a solution, there's a couple of things you need to do. You need to figure out what data you're tracking now and where it's at, where it's stored. Figure out what additional data you need to be tracking that you may not be tracking, like the offer of enrollment. And figure out if you're required to file electronically. That's a big one to determine what type of solution you want, if you're going to look for an external solution, and decide if you want to handle it internally or potentially outsource this to a vendor to provide this service. For those of you that are planning on doing the reporting in-house, like I said, you definitely need to get IT involved. Look at what systems you have in place. If you're using QuickBooks or even an accounting system, you need to start there. Figure out what forms are in the system, how you use it, where the data is if it's not in your current system. For those of you that are looking to outsource, have someone else do this reporting for you. You want to start and look at your payroll provider. Do you outsource your payroll? Do they offer this service? What am I tracking today? What I'm tracking, is it in that system that's going to do the reporting? Do I need to add on additional functionality? So for those of you that have an internal payroll system, and mind you, remember I did HR tech consulting for years, because I know that there's a lot of employers out there that have internal payroll systems and there's nothing, they can't move it. They don't have an option. A good example is construction companies. You'll have a lot of construction companies that are tied into an industry-specific software, like a Timberline that's tied into the job costing. But the challenge with that is that systems like that sometimes don't have benefits enrollment data. And so these are the employers that really have the hardest challenge as far as figuring out where to go to do this reporting. So I'm going to give you just a couple of different paths to consider. If you can, and this is mainly companies that are still using QuickBooks that are larger, you can consider replacing your internal solution with potentially an HRIS payroll provider, like a traditional outsourced payroll. Maybe complement it with an online enrollment, or there are standalone ACA tools out there. And I'm going to talk a little bit about those 2 options in just a minute. If nothing else, though, you do need to track this information manually if you don't have any other choice. But you need to figure out what your internal payroll provider does. In-house, and I talked a little bit about this, the biggest challenge with employers that are using these in-house systems to process payroll And I'm lumping it all into one, accounting systems, ERP systems, softwares, even on the large market, you'll see SAP, Oracle, PeopleSoft. Either the internal systems, there's two different sides of it. There's either A, it doesn't do benefits enrollment, or B, it's so expensive that you can't add it on to the functionality, and that's more that larger market. The big challenge with this is you really need to dig into your current provider. If nothing else, call them, look online, see what they have, and then if they have the forms and your benefits enrollment data somewhere else, how it's going to get into your system, how you're going to have it pre-populate the forms, how you're going to file electronically if you're over that size. Employers in this category may want to outsource this ACA reporting, even if they don't outsource payroll. In that instance, that might be a situation you want to look at an ACA standalone provider or some other options there. Outsourcing, if you currently outsource your payroll, a big one, you need to review adding on functionality with your current provider. Why? I'll give you a perfect example. There's a lot of ADP customers out there on different types of ADP products. You'll even find some on PCPW, which is their very older version, different versions of Workforce Now. Remember what I said about payroll only on the 1095-C and the payroll deductions? If you're using payroll only, even with a company like ADP, they don't have the benefit information they need for your 1095-C with payroll only. That's the reason why the big rush to add on or to upgrade for some of these providers. And so if you haven't had that conversation, you definitely want to see, okay, do I need to add on additional functionality for my current provider to do this reporting for me? Is there an additional cost? That has actually spurred some employers that would never replace payroll and never consider a different provider, potentially looking at a different solution. Maybe because the cost is too much, or maybe because they just haven't looked before, and now it's kind of spurring that to look at a different provider. Another option, of course, if you have your payroll outsourced, is to consider complementing it with an online enrollment or an ACA standalone tool. The only thing I warn you about this area is if you put a standalone open enrollment or an online enrollment vendor, you want to make sure to figure out, okay, who's doing my reporting? Because if your payroll provider is the one you're still expecting to do your reporting for you, you have to realize that all your information for your 1095-C may be in that benefits enrollment system. So how is that going to work? Is the data going to go through? Am I going to have to manually enter in data? And that's a very good point, because a lot of benefits enrollment providers, even though they collect the data, may not do the actual filing to the IRS. A big point for outsourcing, I think I made this point earlier, not all payroll companies are created equal. You'll find a lot of smaller companies, and I've heard so many war stories after this presentation. I've been starting it since January. Employers come back and they're like, man, I called my payroll company. They didn't even know what I was talking about. Or they said they'd get back to me in 20 to 25 days. There's thousands of payroll providers out there. Small local companies rebranding someone else's software. You want to make sure you really ask the hard questions as you're looking at these different providers. Most payroll companies will submit electronically to the IRS. We submit to the IRS now for payroll, and that's the reason why it's kind of a no-brainer for us. But make sure you ask detailed questions, how they're storing, if you get audited, things to look at behind the scenes that I pointed out. Benefit enrollment providers, now, benefits enrollment systems, I'm never knocking these guys. I came from a consulting background. There's always a good reason sometimes for a benefits enrollment system, so don't think that I'm negative against these providers. We interface with them today, lots of different benefit systems. They're being very prevalent in the private exchange space. What I'd like to leave with you is that if you're using a separate benefit system, just think who's doing the reporting and where does the data sit. One thing is that when you're using a separate benefit system, they collect the majority of data you need for the 1095-C, but they're missing everything for the 1094-C. However, the hard part is really the 1095-C. So that's an area you want to think about, kind of figure out how it's going to get from one place to another, who does the reporting. Some benefits enrollment providers are doing the filing to the IRS, but it's very few. It's like 2 or 3 that are out there, and most of them are in that 1,000-plus space. They can, most of them, easily pre-populate the forms themselves. So if you're going to do the reporting in-house, you're just going to submit it. You just want the forms splashed with all the data on it, that's a good place to look because at least it'll fill out part of the data that they have. Now, the whole new breed of vendors that are out there are the standalone ACA vendors. It's a whole lot of companies, and I kind of spurred up because the reporting is so hard. These vendors are impressive, just like the benefits enrollment companies. They have what I call best-of-breed modeling. So, for example, if you raise your contribution by 10%, you can kind of figure out your potential penalties based off the raise or lower, that type of thing. However, one thing that's very important for you to know, and these vendors, by the way, are going to file to the IRS, where the benefits enrollment, most of them aren't. At least these guys are saying they'll file to it. But one important point is that the standalone ACA vendors, they don't do payroll, and they're not doing your benefits enrollment. So they don't actually have any of the data in their system that they need to do the reporting. And so the data for them is only as good as what you have. So if you picture a normal employer, if you're using QuickBooks or if you're using a payroll provider and you don't have your benefits enrollment in an automated way, it will be a challenge for you because you're going to have to fill out an Excel document that's pretty cumbersome to get in on a regular basis in order for them to do the reporting for you. Also, these providers, sometimes the pricing tends to push them in the larger market, 500 to 1,000 plus employees. To leave on a stressful note, but it's an important one that you need to know, most employers are familiar with the $2,000, $3,000 penalty, if you don't offer insurance or if you don't offer affordable insurance. This one is the one that's not as known. So if you file incorrectly or if you do not file, the penalty is up to $100 per statement return. And I want to point out very clearly what that means. So if you count up your 1095Cs, so if you have 200 employees and you figure you're going to have 220 1095Cs, take that number times 100, and that's your potential penalty. The maximum on this penalty is $1.5 million. Now, the good news is that there is relief for this calendar year from the IRS. But one important point is that you must meet the filing deadlines. You don't want to be late on the filing, and you must also show good faith compliance. In other words, you need to try to file as most accurately as possible. But the big point is that those employers out there that are thinking that they're just not going to file this year, they don't think they have to file this year, they will charge a penalty of $100 per statement return. And I've had a lot of questions as far as how they'll figure out that number, and my guess is they'll take it from your W-2s. And that number may even be larger than what 1095 Cs you would produce. I'm going to open it up to questions. You see the little chat box.
I just unmuted everyone, Jennifer.
Okay. For those of you online, you want to go ahead and, I was looking at the chat box. I see a question. So box, I see part 2, line 19, should be yes for each EIN. I'm actually going to back up for a second. Oh, for the authoritative transmittal? That's correct. If you're talking about the 1094C, if you, on the 19, you're going to submit one 1094C for each EIN, and yes, it's going to say yes. I'm answering that question. So the next question I have is, with open enrollment being once a year, how do you fill out line 14 on 1095C Part 2? So the way that works is that if, say you're a 1-1 renewal, or let's do something more complicated. Say you're a 7-1. You offered benefits. If they enrolled or didn't, you're going to have the code for July through the rest of the year. So really, if you're back here in July, you're going to go ahead and populate these codes for the rest of the year unless they change status. So it doesn't mean you have to offer benefits every month. It just means that if they don't change status, they're full-time the rest of the year, it's just going to assume it for the rest of the year.
Michelle.
Hello?
You're still here, Jennifer.
Okay. An employer, the next question was, as an employer, what do we have to do if the employee changes marital status? For example, our HR director is not notified. For the marital status, all you're showing is the offer. So at the point of, when you're offering benefits, You're going to know you're offering employee and family employees, but it really doesn't matter if they enroll or not. It's more the offer. Down here in Part 3, you know, the employee, you're going to show who's enrolled. I mean, so whether they changed or not, you really only have two answers. Did you make the offer for employee and spouse and family? It really doesn't matter if you know if they're married here, just if you offered it to them. And then Part 3, the enrollment information, you're going to know if they're enrolled based off of if they're the carrier. I hope that answers that question. Can you explain the measurement period? That's actually, Natasha, a whole different conversation. The measurement period is mainly for employers that are worried about what's called variable hour employees. If you know your employees are for sure part-time, meaning less than 30 hours average per week, or full-time, then you really don't have to do a particular measurement period. It's mainly for those organizations like in retail, hospitality. If you have some employees that you don't know if they're going to go over 30 hours average per week, that you have to enlist a measurement period. And that's probably a better conversation to have with SterlingRisk afterwards if you're concerned that you need that and haven't assessed that. Let's see. If completing the forms ourselves, can they be handwritten? That's a great question. I'm assuming yes. Ours, of course, won't be because we're submitting electronically, but that's a good question. If you're able to do it by paper, I mean, I just have to look at the instructions on that. I'll have to be honest. I have to get back with you on that. Yes, SterlingRisk has a copy of the presentation. They will be sending it to everyone. That's a couple of different questions. Is the size of the employer determined by the total number of W-2s or the current active employees? If you're talking about if you're an applicable large employer, that's a whole different type of analysis. That's probably better to be discussed offline too. It's really determined by your full-time employees, and then you take a total of all your hours, not average, and then you divide it by a number to get to your full-time equivalents to determine if you're an applicable large employer. So that's probably a good question to have a discussion with SterlingRisk as well, if you're in that category. I got the question, if we pay 100% of the premium for employees, how do we feel in line 15, part 2? So if you pay 100%, then most likely you're going to fall into that category of qualifying offer. If you offer minimal value insurance and minimal essential, 100% means that obviously you're affordable. And so most likely you're not going to have to answer 15. So if you qualify to use 1A, you don't have to answer 15. From Wendy, line 15, part 2, just to clarify, this is only for the employee health insurance coverage only. That's correct. Rita, our renewal is December 1st. We have less than 150 employees. We only have one EIN. Do we have to complete the 1094, 1095? Yes. And even if you qualify for transition relief, you still have to complete the form. You just use the code for transition relief. Natasha, question, if an employee is enrolled in the family plan, do we still have to use the lowest cost for self-only coverage? That is correct. 15 is for the lowest minimal value self-only. It doesn't really have anything to do with what they're actually enrolled in. Allison says, I have a safe harbor question. We determine our safe harbor based on lowest paid employee who takes the insurance. Is that true if the employee does not meet affordability insurance, but they still take the insurance? We will not be penalized. So what triggers the penalties on not being affordable or not offering coverage is the key is the employee has to go to the public exchange and actually enroll in the public exchange and receive a subsidy. So really, once that happens, they're not going to trigger penalties off the employer reporting as more as use it as a reference back. So that's specifically what Stacy Varro has confirmed and many attorneys that are involved in that. Question from Wendy. We have 230 employees under 4 different EINs. How many of the 1094C forms will we need to fill out? So you would have to fill out one 1094C for each EIN. So if you have 4 EINs and there's employees under each of those EINs, then you would have to have 4 1094Cs, and then all the 1095Cs to go under each of those 1094s. And Donna asked, if an employee waives coverage, they have coverage through their spouse, parent, or employer, what is the code for that? So the key is that you're proving the offer, whether they waived or not. There's no real code for waive. You mainly want to keep the waivers in case you get audited. And for now, because you're having to go back and figure out if you offered insurance, because you're not doing that in an electronic way. And so there's not a code for waive. The key is whether you made the offer or not. And how you get to that offer is if you know if they waived or not. It's more from what I meant is a tracking perspective. Question from Natasha, if we make an offer of coverage and the employee does not respond or does not submit a waiver, what do we do? That's probably it's a better question for an attorney, but I can tell you that the waiver itself, there's no specific instructions as far as what you have to prove as far as the waiver. It's just more a good way for you to track that you made the offer. And if you get audited, that'd probably be a better question for, if you're audited, an employee goes to the public exchange, enrolls in insurance, and gets a subsidy, and so the IRS comes back and looks for your information. That'd probably be a better question for the attorney if you don't have a waiver, how you could combat that. Question from Rita. In 2016, since our renewal is in December, do we complete the 1095-C Part 2 information for December only, or do we have to complete the information for the entire year? There has to be a code for the entire year. If you're in transition relief, you're going to use that code up till December. Any other questions? That ends the questions in the chat box. I don't know if you want to open up and unmute everyone to see if there's any additional final questions.
Did she answer your first question?
Sure.
I don't know. Did I answer your first question?
I didn't hear the answer to the first one.
What first question? I may have missed it.
That's it?
I just want to let everyone know that everyone's unmuted, so if you have any questions, you can feel free to open it up, and Jennifer will take your questions over the call.
Hey, Jennifer, you'd mentioned that there are standalone vendors that do this, and you had your hesitations. But I wonder, is there a standalone vendor that does this that you have the greatest comfort level with? I know that's not, I don't know if it's in competition with you. But
no, it really doesn't compete against us. And in fact, we are willing to push data to a standalone vendor if they have that option. I'm more warning you because of the data that you have to get into them. And in fact, I think they're the only option for some employers that are forced to do payroll in-house if they want an outsourced type of model. It's hard for me to give a blessing on a particular one just because the reporting doesn't actually start until next year. So there's no way now to gauge how good any of them really are. Does that make sense? I mean, you can check the law with your broker, have the conversation with the broker, have them dig in and make sure they're handling the law correctly based off the technology. But there's no way to really get a reference at this point unless you're getting a reference for just the reports they're spitting out, like average hours, affordability reports, because the actual reporting hasn't happened yet. So.
Thank you.
No problem.
This is Rachel Sherman from TradeWeb. I have a question.
Consider.
Go ahead, Rachel.
Oh, sorry. Thank you. What happens when an employee changes EINs? Do they have to get reporting individually for each EIN that they might have been employed through or covered throughout the year, and same for the employer filing? How is that handled?
That's a great question. I haven't had that question. That's one I would probably have to send to someone internally at our team. But most likely it would be like anything else. You probably have a 1094-C for part of the year and then have a 1094-C for the other part of the year for the other EIN. But that's one I'll have to take as a take-back. So, Tina, if you write that note down for me, we'll have to follow up on that one.
Thank you.
That's probably the common.
Just because we have to document it for whatever it is.
Is there other questions? We want to remind you that you're all unmuted now.
Sorry about that. This is Natasha. I do have a question.
Okay.
If you have employees who are part-time that work varying hours each month, when do we actually extend an offer? And if they stop working hours under 30 hours a week after we extend the offer, what do we do at that point? Do they become not eligible for benefits at that point?
That's actually a more complicated question that would probably be better addressed by SterlingRisk with you. You know, it's more, you're talking about the actual measurement period, and you have to determine how long your measurement period is. Once you've made the offer, I mean, that employee is literally eligible for the whole period after that. So that's probably a better question to address with them after the fact, off the call.
Okay, thank you.
Yeah. Uh-huh.
Yeah. Oh. Oh. What was the place that we
Wendy, I don't know. Do you have a question? I see a voice talking.
Yeah, so
we have 230
active employees for this
employees
year.
right now.
What if at the end of the year, like W-2 purpose, we have like 300 employees? Do we have to do a 300 1095-C for every employee, even the ones that terminated?
Well, the 1095-C, so are you fully insured or self-insured? Let me ask you that first.
The employer pays for the employee portion of
Right. Is your insurance, though, fully insured?
Yeah.
Okay.
Not
so
for
if
the
you're
coverage, though, just for the employee.
Right. So you have to complete a 1095-C if you're fully insured for every employee that's full-time 1 month out of the calendar year, whether they're terminated or not. The key is, were they full-time 1 month?
Yeah. And then with that being the case, say at the end of the year when we're processing W-2s and filling out these forms, we're over the magic 250 number. At that point, we're required to file electronically?
That's correct. And it's not based on W-2s. It's actually based on 1095-Cs. Yep. And if you're close, I would probably start investigating that a little bit now. Because you can submit electronically if you're below 250. The key is that the IRS requires you to submit electronically if you're over.
And then is there any reporting required as far as ACA is concerned for if an employee is paying for dependent coverage?
No. That's actually not part of it. Okay. The only thing is that when you're doing the offer code, if you qualify for 1A, it'll say minimal essential and minimal value offered to employee that meets affordability with the least minimal essential offered spouse and dependents. It really doesn't have to do with what the employer pays for dependents anywhere on this reporting.
For the employee?
Well, for the dependents. For the employee rate, you have to put it here. The employee rate is what matters. So what the employee pays.
Yeah, if the employee is not paying for the employee coverage but is paying for dependent, line 15 for the dependent.
Well, remember, this is about the offer. It has nothing to do with enrollment. So even if they didn't enroll in employee coverage, then you still have to have a rate for what the rate would be if they had. This is about the offer.
Okay, so so if we're paying for the employee coverage, if the employer is paying for the employee coverage, then
15 would either be 0 if you don't qualify for 1A. Yep.
Okay.
Yep. Are there additional questions before we wrap up?
Yeah, it was a lot of
Yes, one question.
Okay, Gary, go ahead.
Okay. Part 3, it says, and your box is blocking it right now, but it says covered individuals. If employer provided self-insured coverage, check the box and enter the information for each covered individual. What does that mean? Does that mean if you have group insurance with a health insurance provider that you don't have to enter this information?
No. So if you're self-insured, so if you're fully insured, you don't have to put this information down here because the insurance carrier is going to provide that to your employee on the B form. If you're self-insured, excuse me, you definitely have to complete this with the employee, spouse, dependents, and so if they were enrolled on a month-to-month basis.
Oh, okay. So if we have group insurance with an insurance carrier, then they're going to provide this report, not us.
Are you fully insured or self-insured?
Fully insured.
Yes. If you're fully insured, you don't have to worry about Part 3 at all.
Okay.
Just don't even worry about it. Because what will happen is you'll complete Part 1 and Part 2 and send a 1095-C to your employee. And I didn't cover this part because I was focusing on employer reporting. But the insurance carrier and the fully insured will send a 1095-B that pretty much has the same information to your employee. So your employee's going to get really two forms because the carrier is responsible for doing this part if you're fully insured.
Thank you.
And
yes.
if that's the case, does the employee get a W-2 from us, a 1095-C from us, and then the 1095-B separately from the insurance company?
Yes, yes. And not confusing at all, is it, for the employee, but yes. Yep.
What does the employee do with all this information when they're filing their taxes?
They're supposed to bring it with them when they're filing their taxes. Yeah.
Does the employer have any obligation to notify the employee that all this stuff is going to be?
As far as that it will happen, I don't know of any requirement for you to notify them. You know, it might, from your perspective though, I mean, it might help just so there's not a lot of confusion, you know, at the employee level. But I don't know of any requirements, so to educate the employee level about this. If they're enrolled in the public exchange, they'll also get an A form.
This is Natasha again. Can you hear me?
Yes, I can. Hi, Natasha.
Okay. I just wanted to ask a question on what you were talking about, that Part 3 of the 1095-C. So we have a lot of employees whose dependents are not in our system, and one of the challenges that we were facing right now is how to get that from the paper into the system. So you're saying that the insurance company is actually going to be responsible for sending out that information to the employees. Should we, and we don't need to really do this part, so
well,
we don't
if
really
you're
need to
fully
worry
insured,
about this?
that's the key.
Yes.
Are you fully insured?
Yes, we are.
Okay, then you're fully insured. You don't have to worry about Part 3.
Okay, so
that is only for self-insured employers.
Okay. Okay. Good, thank you.
What is the name of the form that the insurance company sends out to the employees?
It's the same type form, but it's the 1095-B. So remember whenever I said if you're self-insured and it's optional to use for non-employees, or the less than 50 self-insured, that's because that form really has the information at the top and this covered information. So the fully insured, the insurance carrier will send a 1095-B to your employee, and then they'll send a 1094-B to the IRS.
And is the requirement for the insurance company, because since we're fully insured, to send the 1095-B form by January 31st?
You know, I don't know that date off the top of my head, but I'm sure it's the same. Yeah.
It's confusing.
But what's very important is that I've had some employers ask me, if I'm fully insured, does that mean I don't have to do the reporting? And the answer is that's not true, because the insurance carrier may be reporting you're covered, but they have no idea if you offered insurance because they don't know your employees that were offered that didn't enroll. So if you're fully insured in 50 or more, you still have to do Part 1 and Part 2. The only employers that do not have to report are less than 50 fully insured.
If somebody work on January 1st and we have a 90-day wait period, so their eligibility is just a rounding, and we're filling out 1095-C, do we first show that we've offered coverage on April 1 and
No.
in April, or do we go all the way back to January?
April. It'd be whatever they would be effectively enrolled, if they enrolled. And then you would use, so if you remember the codes on 16, so what you would do is on 14, no offer of coverage, right, 1H, and then you on 16, you would put employees in a limited non-assessment period while they're in their waiting period.
what number is that? What's on 15? 16.
So 16, limited non-assessments is for the waiting period and for the measurement period. They use one code for both, and it's a different terminology just to confuse you a little bit more. But so the waiting period, you would use 2D for whatever months they're in the waiting period, and then when they flip over to full-time, you're going to use the offer code for whatever, in April or whatever they would normally be effective if they enrolled. Yeah, and for April for the rest of the year, as long as they don't change status.
I'm a little bit confused about. I have employees that are part-time and they're only they're in and out. A lot of kids in school. Now I know about the look-back period to see if they're full-time equivalents, but it looks like on this form, I'm required if they've worked as full-time 1 month period, I have to report them or no?
Well, if you've got an official measurement period, they're still considered part-time until you've measured them and they flipped over to full-time. But if you're not using a measurement period and they're considered full-time 1 month, then yes, you'd have to do a 1095-C.
So if I use a look-back period and they are part-time because for whatever reason, then I don't have to put them on these forms?
Right, not unless they flip over to full-time status and they're full-time 1 month out of the calendar year. Right.
Thank you.
So what happens if you have a full-time employee and you hire them in January, they're not eligible until April, but they leave at the end of January? Do we have to fill out a 1095-C for them?
No.
If they were full-time 1 month out of the calendar year, so if they were full-time status in January, you still have to do a form, but you're going to use the code that, no offer of coverage and that they were in the limited non-assessment period.
Right, okay. So basically every time you hire an employee, you have to generate 1095 as long
as they're full-time. If they're full-time, yep.
Okay, thanks.
No problem. And you can see here the employee not employed during this month. So that example you just gave me, you probably have this for the rest of the year.
No, what I'm saying.
Oh, okay. So regardless of if somebody separates,
saying somebody
and even
January
or at any time during the year, don't leave any blanks. It always is filled in with a.
That's correct. Yeah, and if to apply, you're only going to put one. That's why I started off with 2C trumps all the others, because you only put one code, even if more than one applies. And if you go look at, if you're going to file it yourself, I highly recommend for you to go read the IRS instructions.
Right.
It's very important because all of this is kind of lined up in there. And if you have any questions, SterlingRisk, like I said, has that awesome benefits attorney on retainer. He knows the codes inside and out and can answer any of those odd questions you have.
Whether during that time they're on probation, whether it's within the 90 days they were.
Can you address interns and how you would put those on the form?
That's probably a better, I don't know that one on the spot either. That's probably a better question for Stacy. But I wouldn't think, since an intern, that would probably be a question for him, Tina. Write that down. Because I don't know if interns are considered actually full-time to produce a 1095-C. For the purposes of ACA.
I have another question.
Yes.
With the AOE group member, we have 4 different EIN, and one of them EIN has 171. The others are below 50. Those other 3 companies still have to file the 1094 even though they're under 50
Yes.
employees?
If you're considered an applicable large employer, because you've already gone, and we as an HR payroll company and no HR payroll company should do that assessment for you, by the way. Because the common ownership, it's got all these different rules, if your spouse owns different companies, if you're whoever relatives. But if you already know that you're an aggregate group over the EINs, once that's already applied, the smaller EINs still have to do reporting regardless. Even if they had 10 employees,
right.
If they're part of an aggregate group, they still have to do the 1094 for that EIN, the 1095Cs that go under that.
Okay.
I think this might have been on mute.
Did I miss a question?
Yes. It's insane.
If there's a question coming through, it's really quiet.
Oh, no, it's not a question. I was making a comment about the IRS.
Oh, okay. Yeah. Are there any additional questions that you'd like to address before we end the discussion?
Yes. Hello, Jennifer?
Yes, I hear you.
Are you going to provide this webinar at a later date or, sometime soon so we can go through it again and print out the forms and go through it?
SterlingRisk is actually recording this, so you should have access to it at any time through them.
Okay. Thank you.
Mm-hmm. No problem.
Yes, I just want to let all of our clients know that we are recording the presentation. It will be available on our website. We'll also be sending out an email with a link to the presentation, and you should be receiving that email by the end of the week.
Thank you. Thank you.
Sure. So it doesn't appear that anyone has any other additional questions. So Jennifer, thank you so much. I truly appreciate everything. I think you did a wonderful job, and I hope all of our clients found this webinar helpful and beneficial.
It was my pleasure. Thank you so much.
Thank you.